Back with closing trades right here in ET now. Let's just revisit what the closing trades are looking like right now. Well, the day, of course, started off a lot more stable than we had as a handover from Friday. Right now, we're perking up about 97 odd points, and 25,600 is at least back on the ticker. The weekly expiry tomorrow for the Nifty. Right now, you're seeing a lively breath. GMR Airport, 7.5% higher after its earnings. RVNL, IRADA, Torrent Pharma, Power Grid. These are the names which are holding out. But it's the entire capital market theme which continues to be battered from the word go today. So no improvement whatsoever. In fact, some of these stocks are worsening now. BSE is down almost 7.5%. Angel One is down almost 5%. And I don't think there is a material improvement even in a share of Novama. Inox Wind, Muthoot Finance, Uno Minda are some of the other laggards in trade as we speak right now. But what about the market from here onwards? Let's welcome on board Dikshit Mittal, Senior Fund Manager Equity at LIC Mutual Fund, joining in on the show right now. Dikshit, hi, great to have you on ET now. Thanks for your time. Dikshit, how is it that you're assessing the market? While earnings recovery is definitely in sight, FIIs refuse to come back materially to our markets.
Right. So basically, if you look at the macro side, I think macros are on an upward trajectory. Starting with the nominal GDP growth, I think we should see some kind of acceleration going forward, which is evident in the budgeted figures also. And coming to the earnings, for last 2 years, corporate India's earnings have been slightly sluggish. I would say we have been growing into mid to high single digit. But the pace of downgrades has reduced materially, and third quarter results were, I think, better than expectations. And going into the next financial year, maybe for the FY27, I think with a very high probability that earning growth can accelerate from mid single digit to maybe early double digit. And I think that should give some kind of support to the market. And whatever global, you can say, uncertainties that we had in terms of tariff wars, geopolitical issues, that also seem to be sorting out in a positive way. So we are quite constructive going into the next financial year from here.
Okay, very interesting. Quite constructive. Any sectors, pockets, Dikshit, that you're most bullish about? Maybe the top two?
Yeah, so what we think is private capex has more legs going forward also. In fact, in the last 2 years, when the broader markets earnings have been mid to high single digit, but the private capex related theme, especially into the power capex theme or data center theme, or even on the manufacturing side, I think those have been the kind of some of the pockets which have been growing better than the overall industry growth. I think that trend should continue. And especially after this trade deals with European Union as well as US, I think manufacturing theme can pick up pace going forward also. So private capex and manufacturing is a theme we are betting on. And in terms of larger themes, I think private banks and consumption, I think these two sectors can see some kind of earning recovery going into the next financial year. And I think these two sectors can also perform well going into fiscal 27.
Indeed. Okay, so that's the take right now on the markets. But Dikshit, curious to understand how much more of a derating would IT have to take before we see some stability in prices, or there's more pain to go, you think?
Yeah, IT, I think more than the derating, I think market is waiting for some kind of earning visibility. Even prior to this AI scare, most of these companies were growing in low single digit, and there was very, very kind of limited visibility on the kind of growth they can show going into the next financial year. So I think more than the P market is more focused on some kind of earning recovery. And if the earnings start accelerating for the sector, I think market will tend to discount whatever AI scare that we have. But as of now, sitting right now, I think we still don't have much visibility, the kind of growth rate these companies can deliver going into next year. So that's why I think one should be on a wait and watch mode for this sector, at least for the next 1 to 2 months.
What's the worst that can play out, Dikshit, in this sector? Do you believe that the IT sector as a whole can become redundant of sorts, or you believe that you're not in that camp, that's very unlikely to happen? And Dikshit, most people we've spoken to have said that it's very difficult to get away from some of these IT companies because they're so large and they've become such an important and a vital part of tech in the US as well as services globally. It's very difficult to get away from them. So are you in the camp that only the business model may change, which is why there is that resistance to kind of wait and watch? Or is it that they will likely become redundant gradually, of course, but likely redundant?
No, we can that these companies will eventually adapt, and I think AI will be eventually the enabler, or maybe you can say complementary to the software services. So we don't have any major doubt on the business models of these companies, but we are only waiting for some kind of earnings recovery because global IT spends have been happening on the hardware side for the last 2 years. So we are waiting for some kind of acceleration on the software side. If there is some green shoots on the global spend recovering going into next year, I think these companies can come back into the flavor. But I think to say that the business models are under threat, I think that will be quite premature as of now to say.
And what within manufacturing, Dikshit? How would you play manufacturing? Would you play it through India consumption? Would you play it, excuse me, through the EMS and the export themes which are starting to play out gradually?
Yeah, so basically two, three themes. One is basically, as you mentioned, India consumption, where the more I think focus we have is on the import replacement, the things which were importing earlier and government is trying to replace by the domestic manufacturing. I think that is one thing. And secondly, more and more industries and companies are getting involved in the global supply chain. So I think export is another opportunity. So export as well as the import replacement, these two themes I think we are betting on. And most of these companies, even during this tariff war, they didn't lose a single customer. Only thing is there was some uncertainty on the kind of margins these companies will make. Now that both these things are behind us, I think the companies who are having large customer base, global customer base, which are present into global supply chains, and with this certainty coming into the tariff structure, I think this is a thing, export as well as the import replacement. These are the two themes that we're looking at.
Okay, very interesting. I wonder, Dikshit, how would you look at some of the other spaces or pockets, things which are export facing, pharma, the likes of textiles, which have had their fair share of headwind because of possible resolution between India and US on the tariffs, which is now, there's more visibility on that. Of course, it's not complete yet, but there's better visibility on that. How do you view those, and whether those are pockets which indeed look interesting in this kind of a setup?
Pharma managed to be selective because I think anyway pharma was not part of the tariff which were imposed earlier. But more importantly, on the pharma side, we'll be more inclined to invest into the domestic oriented companies. But on the textile, obviously after this tariff deal announcement, I think this is a huge sigh of relief for the sector because anyways, those companies work on very, very thin margins and 50% tariffs were no way they could have passed on or they could have absorbed. But now this EU tariff as well as US tariff going down from 50 to 18%, I think that should provide quite a good visibility going into next 2-3 years, especially for the textile sector.
Interesting. Okay, Dikshit, great to have you today on the show. Thanks for your time on those quick thoughts on markets and sectors that are looking interesting and what to avoid right now. Let's take a very quick break, come right back. We'll continue tracking markets on closing trades.